Awesome. Thank you so much. Thank you so much, Kevin. Hi, everyone. Thank you for being here today. I know it's a Saturday. It's not that sunny, so we're not missing out too much of a nice day. Please go ahead and take some notes in case you do have some questions and you kind of wait at the end and you don't have time to type. Also take some notes. I have an hour, so Kevin, please let me know when I'm getting close because I do want to have some time for questions. And like Kevin said, if there's something specific, personal, I do have my information at the end. I'll share it. Kevin can definitely share it to everyone. Don't feel like you have to share your personal information right now. You can definitely have a one-on-one conversation with me, either at the end of this presentation or you can reach out a different date. My name is Mary. I'm part of the Point West team. We've been in service for about 80 years. I'm going to go ahead and talk about what makes credit unions different. Credit unions a little bit different, specifically with Point West. We've been around for a while and we have different certifications. You might wonder, well, what does that mean? You kind of just see an institution, a financial institution, you figure, well, it's just a bank, just like any other bank. Well, every different institution has its uniqueness, and ours is we are a low income destination credit union. What that means is that your account is free with Point West Credit Union. Minimum deposit in your account is $5. We're also a CDFI credit union. So what that means is that we pretty much operate like a nonprofit. We have specific programs to help our community. And I am going to talk a little bit about those programs. We're able to also apply for grants to continue supporting and helping our community with any type of needs that they have, specifically with credit, lending, and then I'll talk a little bit more about that. Our other certification that we have is Juntos Avanzamos. Juntos Avanzamos, what that means is that we're able to help our immigrant community if they don't have a valid social security number, but they do have a tax ID number, then we're able to use that and help them build credit in the United States. We're also able to approve matriculas. Those are specific ID cards from people from Guatemala or Mexico. And we also accept foreign passports. So if you don't have a specific state ID from the United States, we're able to see what type of ID do you have from your foreign country, and we're able to see if we can take that. So these certifications are really important to Point West because we're able to really help our community that needs us the most. And so with these certifications, we're able to say, hey, this is what we do, this is what we can do to help. Therefore, we do also provide support with the IDAs. Like I said, we are low income destinations. More than, I would say now, more than 40% of our lending department is helping our non-citizens, which means, again, if you don't have a valid social security number, you're using a tax ID number, we're able to help you start your business, take out a loan to buy a car, and anything you need. Pretty much we go straight ahead with, like, either if you have a social or an ITIN, it doesn't matter. We base it on your credit, and I am going to talk a little bit more about that. But before I jump to that exciting part, I do want to clarify what is the difference between a credit union and a bank, because like I said, many of us, we go to our financial institution, but we don't really know, well, is it a credit union? Is it a bank? What's the difference? So I just want to take a couple minutes to just talk about the difference. So banks are for profit. Credit unions are not for profit. They're member owned. So what that means is that when you deposit your $5, you become part of that membership. You bring your share. So that means you have a vote. And so every year there is an annual business meeting where all the members can actually, meet up. Obviously, we used to do it in person, but now it's virtually. And so we have meetings once a year. You get to vote as well if you're a member. And so because you're part of that cooperative, you're part of that union. So credit unions are based with the community. And so banks are for profit. That means that they have shareholders. So that means that they have to have specific requirements, as in how much money they're making to be able to pay their shareholders. That's why you sometimes feel or see that they're more of like, okay, they're trying to sell you products. That's because they have to have a specific sales every month where they're, trying to pay their shareholders. Banks do pay more taxes because they do make a lot more money. Credit unions also pay taxes, but they don't pay as much taxes as banks because our taxes go back to providing services for our members, either with low interest on their first time card or second chance on a checking account. If for some reason they don't have perfect credit, or they have no credit. And so we're able to provide proof of we're helping the community. And so banks do have more, I would say, offices, as for example, with Fargo or Chase, you see them everywhere. Well, credit unions, sometimes, like for example, Point West, we only have one branch. And then you're like, well, Mary, only one branch. The difference between us credit unions is that you can go to other credit unions and you can actually use the services. For example, right now I'm in Vancouver, Washington. That's where I live. So I can go to another credit union like IQ Credit Union or Columbia Credit Union, and I can make deposits and withdrawals, and I can get service there. Same thing if I was with my credit union at Point West. So credit unions are based, they're together. We're a big family, so we can help each other and help our members. So that's that's the unique part. We are both insured up to $250,000. What does that mean? That means that if you have an account with either a credit union or a bank, your account is secured. So if you have your money in your house, that money is not secured. It has to be in your bank account. And so that is per account. So let's say you have an account for your child, or you have an account with your significant other, or your parent or niece or anybody. It's per account. And so that would be covered, $250 per account. And so that's a good clarification there. As for what type of accounts do we offer? Well, just like any other institution, we offer checking accounts, savings accounts, club accounts, money market accounts. It is not tied up to the money market. It's just the name of it. Its special name, I guess. The youth accounts, those are very, very awesome. We do try to really encourage our kiddos to start saving from a small age. Business accounts, totally free accounts. They're the same as regular accounts, minimum deposit of $5. We do not offer retirement accounts, but I did want to mention those because we are going to talk about retirement accounts. But other credit unions do offer retirement accounts and certificates. Okay. So I did talk a little bit about some of the requirements, basically, and this is depending on which institution you go to. And these are just basics. I'll go ahead and jump into the fun conversation in a little bit. But for the basics, if for minors specifically, if they're younger than 18, then they need to have an adult with them. And then so you need to provide a state ID, your passport, valid passport if you don't have, a state ID, matricula if you don't have an ID from this country, valid social or an ITIN if you're gonna be applying for a loan. Well, last pay stubs if you're self-employed, last 2 years taxes, and I am going to talk a little bit more about more requirements depending on the lending part. But before I do that, I have a question. Why should you budget? That's a question that I get asked quite a bit. You're like, well, Mary, why should I budget? Why should I budget? If, I can't even, pay my bills on time, right? Or sometimes I'm just, living paycheck to paycheck. Why should I budget? Well, because we want to have specific goals in our lives, right? We want to buy a house, right? We want to retire. We want, to help our children get a higher education. We want to do so many things. So if you start budgeting and understanding your spending, you can find those little holes in your budgeting where you can see your money going out the door. So it's really important to budget. A lot of people feel like you have to be an accountant specialist to be able to have the perfect budget, and that is not true. There's so many ways that you can actually budget that will work for you. And I am going to talk a little bit more about that. But let's remember one thing. It's really important to set yourself some goals for you to be able to encourage yourself to budget. There's 3 scenarios. You want to make sure you have a long-term goal, which is, again, retirement, college funds, buying a home, or, it can be anything that is important to you as a long term. And then also, think about a short term, right? Something that can come quicker, that can be, a month, 2 months, 3 months, because that short goal is really going to encourage you to keep working for that long-term goal. And it's going to remind you that, hey, if I was able to save to go on vacation with my family or just on my own, then you know what? That means that I am able to, continue with my long goal, right? Then if I was able to do my short-term goal, I can make my long-term goal happen. And so let's also talk about, what about your middle goal, right? What about what's between that? So it's going to be baby steps from there. Then you continue. What's going to happen later on in your life? What happens if you get married, if you have a child, if you have a car and then you're like, oh, guess what? Now I need a bigger car because my family's growing. Or maybe I have a dog now, right? Now I need an SUV, right? Or wow, gas is so expensive. Now I have an SUV. Now I need, a smaller car. So those are goals that you really have to start thinking about. But the goals really match your budget, right? It's part of that. They're like cousins. You can't really do one without the other one. You can't really achieve your goals if you don't have a budget in mind. And for that, we're going to talk about, well, how can I keep my account then in that budget range? How can I manage it? Well, there's different areas. I would say 99% of the time, all the institutions, all the credit unions, including Point West, they have a mobile app, right? That part of the mobile app, it helps you budget because you can see your account every day. You can put alerts in your account that says, okay, well, if my account went lower than $100, then you get an alert. Hey, your account is currently at this. Then you're like, wow, I really need to pay attention. Where am I spending my money? So you're able to do, manage your account now more than you used to back in, 10 years ago, right? There's still there's online banking. If you're like, well, Mary, I don't know about my phone. You have a tablet, then you're able to do the online banking. If you're an old school person and you're like, no, you know what? I like paper. You can write it down. I always say, make sure you just don't write account numbers down. Just write down what you're spending, what it is. And there's also other types of programs that you'll see or on your phone too, like the Mint. You'll see apps that come all the time and then they're like, oh, download, this is for, so you can manage your account. I always say it's good to kind of look at other options, but you really want to also make sure you understand what you're downloading in your phone and what you're connecting to your account, because you don't want to be involved in any type of fraud. And so you want to make sure that if there's a software, if there's an app that is saying, hey, attach your personal account to this because we're going to help you manage your account, that's an alert, like that's a red flag right there. You want to make sure to call your institution and say, hey, I found this app or I found this link. Can you guys help me out and see if this is legit, right? Just let your IT, with your credit union, let them know, hey, what can I use with you that can help me manage my account? There's always free tools that they already have, but sometimes we don't even know. So that's the first thing I'll say is, if you don't have a specific way of managing your account right now, I will reach out to your institution first and say, hey, you know what? I am working on my budget. I am working on keeping my account. I have some goals in mind. I need to know what tools do you have for me that will help me be successful in my goals. And that would be the first thing that I would say to do. Now we're going to go and talk about retirement. Who wants to retire? I sure do. I want to retire now. And oh my goodness, I still have so many years to go. And so, we all want to retire, right? We all want to, say, you know what, I am done. I just want to just relax, enjoy my family, and just retire. So it's really important to know what's out there. It's really important to start now and say, okay, what can I do now that's going to help me retire, right? That it's going to be like, okay, I'm finally going to retire and then I don't have to go back to work, because we hear those stories nowadays where you're like, wow, I just heard, my family member or somebody that said, okay, I'm retiring. They retire after, and they retire 2 years and then they have to go back to work, right? Because they need money, right? And so that's because we need to prepare ourselves to retire. We need to save our money and say, okay, well, part of my goal, right? Long-term goal is to retire, right? So how much money how much money is going into that retirement account, right? And that's something that you have to think about. Okay, so first we have a couple options. IRAs, for people that haven't heard, those are individual retirement accounts. There's credit unions that offer IRAs. There's two. There's more than two, way more than two, but I picked two. But there's for self-employed. There's for our kiddos that are going to go to college. I mean, there's quite a bit of them, but I picked the two most popular ones. So the traditional, it's tax deduction when you contribute. So every year you're able to contribute a certain amount. And so you're able to, put it away. That's you already paid your taxes. Everything is done. And so when the time comes to retire, you don't have to worry about anything. That really helps. A lot of people do it, especially people that don't have dependents. And I'm not a tax advisor, so I'm not telling you what to do. But a lot of people that don't have dependents and they're paying a lot of taxes, they open a IRA. Right? Because that helps them with their taxes, right? Then Uncle Sam doesn't take all that money from them. And so you really want to talk to a tax advisor on which one is best for you. But just so you know the difference between these, the Roth, that one, you pay taxes when the funds, so it's tax-free account. So pretty much, it's the opposite of the traditional. So based on your tax bracket, your tax advisor will let you know, hey, you can have both if you want, but if you can pick one or the other. And then 401k, there's more than one 401k, but again, I did the 401k contribution that is sponsored by employers. Check with your employer. If you have not started a 401k, you are definitely missing out. I know there's a lot of employers that do not match, and some match amazingly and some don't. But again, if you're contributing yourself and you're putting that money instead of paying taxes on it, and you're able to put money away, and start saving, again, you would definitely need to talk to a tax advisor to be able to talk to you more about specifically on your scenario. But these are really important accounts to understand and have knowledge of, for you to be able to do what? Retire, right? And not to come back and work again after enjoying retirement for a few years, right? You want to be able to say, okay, what's out there? What can I do now? What can I contribute? Even if it's a little bit, even if it's per check, you're putting money on the side and be like, okay, I got paid today. Automatically, it can come out of your paycheck without even you knowing, right? It's going to go on the side and be like, okay, this money is for my retirement. This money is for my retirement. And that's going to save you so much money with your taxes. You're going to retire happy. You're going to enjoy your family. So it's really important to know this information. We also want to talk about what can you invest, right? Sometimes we feel like we're like, okay, well, I feel like I'm always just paying and paying and paying and paying. When I talk to a bank or a credit union, I feel like the only reason I talk to them is because I need money, right? And I need a loan, so then that means I'm going to pay them and I'm going to pay interest. Well, let's talk about how can you talk to your credit union and let them know, hey, how can I invest my money? You know, let's talk about investing your money. If you have money saved in your savings and that money is just sitting there and it's not doing anything, why is it just sitting there, right? Let's talk to our financial institution and say, hey, I need to find a way that I can invest my money. Remember, your money is secured $250,000 if it stays in your credit union, right? So remember that, that's really important. So you want to make sure you talk to your financial institution. So CDs, for those that don't know, it's a specific savings account, I would say, savings account that is pledged for a specific time. It can either be for a couple months, it can be for a couple years, depending how long you have it there. It's the interest rate that you're going to be earning, the dividends, which we call it dividends. So, you know, you're getting paid every month for having that money there. That account is tied, you can't move it. Yes, if you have an emergency, you can take it out. Will they feed you? Yes, they sure will. They'll go ahead and feed you for taking it out early, which is called a penalty. Will you be missing out like, you know, on your money? No, they'll just probably take your dividends that you earned. Pretty much that's what they do. And sometimes depending on what institution, you know, it might be 2 months of, you know, penalty, or, you know, that would depend on the financial institution. You would definitely need to talk to them about it. There's also bonds. Who has seen a bond, you know, a real bond, right? Ever. I have. I remember the first time I saw a bond, I was like, this is what a bond is? It's like, oh, this looks just like a paper. Well, yeah, it is. So a bond, yeah, there still exists. For those that don't know what it is pretty much you're lending your own money, right? You're lending your own money for a specific amount of time. You're holding that, you know, that bond until it matures, and then you pretty much go, and then you get your profit plus, you know, what you earned within that time, you know, and so only specific places sell bonds. They're federal, state, and local government. So you can't just go to your credit union and be like, oh, I want a bond. And so those are bonds and they still exist. And, you know, the interest can be pretty low, but they're there. Stocks. You know, we see stories about stocks all the time. You are your own company, pretty much. You bet your own money, you put your own money to work, and you just have to be very careful. I always say if investing is new for you, don't do it on your own. You know, really try to talk to your financial institution. For the most part, they all have a financial advisor for free for you to talk to. So take advantage of anything that is free. So if you talk to your financial advisor, let them know, hey, I want to invest money, I have money. What can I do? If your credit union doesn't have good certificates or good programs that they can offer you, then you can talk to somebody else. But don't do it out on your own. There's just so much going on. There's just so much fraud going on. If you took some classes, you feel prepared, you're like, okay, I did my homework, I think I'm ready, then that's a different story. But if investing is you're new at it, I would say, you know, don't do it on your own. Now, there's a new different way of investing your money though. And it's secured for $250,000. So Checking accounts. Nowadays, checking accounts earn more interest than a certificate. Why is that? Well, that's because banks and credit unions are fighting for your membership. That means that they're giving you more incentives for you to join. So you'll see promotions, you'll see emails. How many emails do you get a day in your inbox saying, hey, open an account here, you're gonna get $500. Hey, open an account here, you're gonna get $300, right? We get those all the time via text, email, we see them all the time, right? So they're trying to have you joined, right? They're trying to have you join and have you become a client, a member. So checking accounts are earning a lot more dividends, interest than certificates. For example, I'm going to share the ones that we do. So flex checking accounts, we're paying 3%. And we're paying 3% up to $15,000. Are we paying just because? No, of course not. And that's another thing. When you get those promos, there's always a but. So you want to make sure that you read everything and you understand, hey, if I'm going to earn this, what do I need to do? Because sometimes we just kind of sit and wait for our $500 and we never get it. But that's because there's just so much other things and so many requirements that we didn't really know. So you always want to make sure that you ask those questions. So for us specifically, you do need to be enrolled in online banking, have e-statements, have a credit card with us, use it with us at least 15 times. If you don't want a credit card, you can have a debit card. We'll still pay 1.5% on your checking account up to $5,000. So these accounts are available for you to just, earn some interest, right? Earn some dividends. Like I said, we're so used to still of just paying interest, paying bills, that sometimes we just don't know that we can actually invest a little bit of our money and get some, some dividends back, some interest back. And so, these are also some options. Now we're going to talk a little bit about credit, my favorite conversation. Why do we need credit? Why do we need credit? For many things, right? Not just for lending purposes or not just for a house, not just for a car. Sometimes we need credit for, a cell phone, right? Insurance, to get an apartment. So we don't have to pay a high deposit. We need credit here for everything. I always compare credit to to a DNA, to your own DNA. They're like, Mary, you're so extra. I'm like, well, it's true, because credit, it's like it's your credit, it's yours. You don't share it. We share everything. We share kids, we share bills, we share everything, but your credit is yours. It's yours forever, right? So yes, credit is your DNA. So you have to take care of it. And so we're going to talk a little bit about what is credit. For those that don't know, there's 3 agencies: Experian, Equifax, and TransUnion. Credit runs from the best, which is 850, to the worst, which is 300. This is how they take it, right? Do we know if it's what's worse or what's best? That is what they say. However, every institution sees this structure different. What do I mean by that? Well, right now you see that there's a 660 and it says not good. Well, if you go to Point West, we're like, wow, 660, that's pretty good, right? This is standard for many banks, right? But each institution sees this scenario or this board, these numbers differently, right? Why? Because again, credit unions are member owned, right? Remember the first scenario I talked about, banks versus credit unions. Specifically, if it's a credit union that is a CDFI, that is, it works like a nonprofit, then for them, even a 600 is a good credit, right? Why? Because we have specific program for members, and our guidelines and our underwriting, which I am going to talk a little bit more about, we see it a little different than other banks, right? And so you always want to make sure that you know that before you apply at an institution, kind of know what they look at, know, hey, how do you guys run credit? Understand their process so you know more a little bit of what you're going to expect. Now let's talk about a little bit more about specific programs. A lot of times we tend to think, well, Mary, I don't have a $10,000 credit card, so that means that I have bad credit because my credit card is only $500. That's not true. So we sometimes think that because we're in debt so much more that our credit means that our credit is better than somebody that only has a credit card for $500, and that's not true. Someone that has a credit card for even $60 can have the same perfect credit as somebody that has a credit card for $10,000. Why? Because credit is based on history. It's how you pay it and how you use it every month, right? It's how your responsibility is as in taking that debt and paying it back every month, right? So that being said, it's really important to know that for you to build credit, you don't have to go in debt. There's programs where you can actually build credit, or if, like I said, you had an oopsie doopsie, I messed up, I didn't know, now I need to fix my credit, heal my credit, then there's also these type of programs, which this one right here called Pathways. So this specific program, it's a share secure card for $60. Does it have to be 60? Can it be more? Of course it can be more. It can be 100, it can be 200. You can put whatever you want on it. Why is it 60? Because we don't want to put a high amount and it be something that you can't have, right? Sometimes, like I said, we have a budget, right? We are already so tight in our money every month that we can't afford, putting $1,000 on the side for a credit card just to build credit, right? And so we wanted that $60 wasn't part of the issue for you to build credit. So you secured a credit card for $60, right? So you deposit $60 in your account. You can't move those $60. You get a credit card for your name. You get a credit card mailed to you. Mary Vasquez got a credit card for $60. What am I going to do? Am I just going to go to the store and just, oh, I have $60. Let me just buy something? Well, no, if I'm in a budget, I want to make sure I want to pay something that I already pay every month. For example, my cell phone bill. Okay, I pay my cell phone every month. I pay $45. Then I want to tie my bill every month with this credit card. So by doing that, my bill is going to get paid every month using this credit card, and I'm just going to pay my credit union $45 every month. So you see that? It's just a cycle. I'm not going into debt. I am not, buying something I don't need because I have a budget, right? I have goals in life. I have my budget set up already for me. But what I'm doing with this program, what I'm doing with this credit card is that I'm building credit, right? Maybe I don't need a car right now, or maybe, I'm building my credit because I want to buy a house, or I want to buy a car, but my credit is not the best. I need to work for that. So my interest can be low when I need my car or when I'm ready to buy my house, right? When I have that down payment ready. So these are programs that can help you build your credit without going into debt. What about if you're like, well, I don't know, Mary, credit cards scare me. I hear really bad stories about credit cards, so I'd rather not have a credit card. Well, there's also credit builder loans. What is this? This is a personal loan. It works the same thing. It can be $60. This one is tied by specific amounts because it's a minimum payment of $10. So again, let's just put $60 as a scenario because it's just a small amount and we can, do our math easier. So you, again, put $60 on the side. You have a loan for $60 with Point West. You pay every month $10. What does Point West does? We go ahead and let Experian, Equifax, and TransUnion know Mary Vasquez is paying a monthly payment every month. She's paying on time. There it goes. There goes a history. There goes a history. Payment history, right? And that happens for 6 months because it's $60, right? 6 months, $60. And so I have built right there, 6 months history with my credit, right? And so again, we don't have to go into debt to be able to build credit, right? Because not saying that debt is bad, it's good if it's good debt for you, right? If it's debt to buy your house, it's debt to, get a higher education, if it's debt to start a business, if it's good debt for you, then it's good debt. But you have to make sure that to understand that you don't have to go into debt just to build credit. What does an underwriter look for? I do like to talk about this because I always get those scenarios where they, some of our members, sometimes say, well, Mary, I applied and I was denied. I have no idea. So that's why I never apply anymore, because I don't know what happened. So I like to talk about, well, what do we look at, right? I want to know that our community knows. So we look at, what are you applying for? Collateral, right? We review it. Is it another credit card? Do you already have 5 credit cards? And I would say, Mary, you don't need 6 credit cards. You don't need 6 credit cards. I'm sorry, you have been a long time member with us, but if we give you another credit card, we're just doing a bad service for you, because that's something that you don't need, right? What is going on? You need money, you have an emergency, maybe a personal loan, maybe a consolidation loan. We can help you consolidate all those credit cards and help you out with your emergency. If you're having some issues, what do you need that money for? So sometimes, the institution looks to see what you're trying to buy. If you're buying a car, right, they're going to look at the value of the car. If they see that the value of the car is super low and they're charging a lot for the car, they're probably going to decline you, because the car is not worth what they're selling it for. So they're going to decline that, right? They also look at debt to income. What does that mean? Well, what they do is they calculate all your bills, right? Your rent, all that's in your credit report, even if it's a car that you took out for your mom or your dad or anybody. If you're a co-signer in that car, on that car, what does that mean? What's a co-signer? What's a co-signer? A co-signer means that you're helping somebody else take that vehicle out, right? That means that you're letting them know, hey, if my sister doesn't pay, I'm going to pay for her, right? So what an institution has to do, an institution has to see that as your responsibility. So unfortunately, we do have to deduct it from your bills, right? Because if your sister doesn't pay, then that means you have to pay. So that sometimes can be also a reason why a decline happens. And then obviously they look at a credit score. Credit score says everything, right? Yes, it's important to have a relationship with the financial institution. They will also look at that. They'll be like, oh, Mary's been here for 15 years. She has never had any issues with her accounts. Yes, that's really important. But at the end of the day, they also want to know that you are being a responsible payer everywhere else too. They're going to look at your credit history. Have you had bankruptcy? What type of late payments have you had? With who, right? Do you currently have a car loan and you've been paying late and now you're trying to get a second car, right? Those are the things that they're going to look at. What about if you have collections, right? You're like, wow, I have collections. I don't know what's going to happen. During all this crisis that happened, past 2 years, I had to go to the doctor a couple of times. Now I'm not going to get approved. Well, if it's doctor collections, then that's different than if they see a collections for a credit card or collections for a car, because we don't know what's going to happen especially with our medical health, right? We don't know. We have to go to the doctor, right? And so it's always important to also give your story when you're applying for a loan. I always let people know, when you apply for a loan, it's like when you go to the doctor, right? You tend to not really say, what's going on with your credit, and that you mess up, or you had issues, or you got a divorce, or you had medical issues and your credit is not the best. And you tend not to say anything because you're embarrassed, right? And it is, it can be embarrassing, especially talking about it with somebody that you've never met before, right? And so, but like I always say, it's like when you go to the doctors, they're not going to know if you don't tell them. They're gonna know anyways when they check you, right? It's like when you go to doctors, they're gonna check your blood pressure and they're gonna be like, well, you haven't been eating healthy. I see all this now. Same thing, when we run the credit, we're gonna see that Mary, had some collections because she had to go to the doctor last year. Mary lost her job. And so unfortunately, she was passed through a couple of times, but now she has a new job. And so when that happens, it's like when you're applying for a loan, let them know. Be like, you know what? I need to consolidate my credit cards. And I know my credit is not the best. I've been working hard on it. I had, unfortunately, I lost my job last year, but I have a full-time job now. I've been working for the past 6 months, a year, or, I went, I have some medical collections, but I'm currently paying them. So we want to know that because we have to take that in consideration to be able to give you a second chance on your loan. So if we know that and we look at your credit and then we know specifically what we're looking at, then we have a reason, we have a knowledge of what happened, right? And so they look at it differently. So it's always important to give them your story, let them know. And so that's just a tip that I wanted to share with you guys. And then I also just, how to get connected, how to find us. If you want to go in person, we are located at the Lloyd Center area, right on 9th, like literally across the street from the DoubleTree by the Lloyd Center. You can definitely call us. We're open Monday to Friday, or you can visit our website. Super easy. You can become a member. You can apply for any of these programs that I talked about, and we have a lot more amazing programs. And you have my contact information. Like I said, if you have a specific question and it's a little personal and you don't want to ask it right now, that is okay. You don't have to. Please go ahead and send me an email. If you call me, please leave me a message with your full name and phone number, and I'll try my best to return your call at least in 24 hours. The email works best for me. Thank you so much for your time. I really hope you enjoyed it. Any questions?
Awesome. Thank you so much, Mary. That was fabulous, actually. There was a lot of really great information. Yeah, let's look at the chat box and see if we have any questions for you. I don't see any in the chat box. If folks would like, they're welcome to unmute themselves and ask Mary any questions that you would like about anything that we've covered today.
Shy people, we have shy people today, Kevin.
I just want to say thanks for sharing that we could open up a secured card for $60 because I never even, I thought 300 in my mind would be the lowest, but that was some good information. Thank you.
Yeah, you're welcome. Thank you. Yes. It's also really good for our younger kids, our teenagers, especially our teenagers that are coming out of college. They don't need to go into debt, but they do need to kind of have that pathway to credit whenever they need it in life, right? And so I always recommend the $60 one to them, specifically to our young folks, because they're in a tight budget where they need to be restricted on how much they can spend, but it's helping them establish credit, right? So when they need it. And so I love that program, and I always love sharing it.
Thank you.
Mm-hmm. Any other questions? I did share my contact information. Like I said, please feel free to reach out if there's something specific, or even maybe something that it wasn't mentioned that you have a question of. If I don't know the answer, believe me, I'll find it. Please reach out. Thank you so much. Yes.
I do have another quick question. So I noticed that you recorded it. Is there a way we can have access to the recording?
Oh, I don't know. That's a Kevin question.
Yeah, actually, so what we're going to do is when we're done here, we're going to work with our communications department to put these recordings up on NAYA's social media. So definitely keep an eye out. We have everyone's contact information, so we're going to be sending out emails to let you know when everything's up and you can watch it again.
Okay, that's great. I didn't realize, because I'm limited for my camera view, but Kevin, I also was having connectivity issues for the earlier home ownership workshop. I definitely want to access that one as well.
Yep, and that was recorded too, so we'll definitely make sure we get that to you.
Awesome. Thank you guys so much for your time in putting this on.
Yeah, thank you for coming.
Yeah, thank you. And there's a question on the chat. Yes, credit unions are part of the co-op network. So the question is, moved states and thought that she had to transfer everything over. You don't have to if your credit union is part of that share network. Your credit union does have to pay a membership to be part of that network. So that means that, if I go, to California, Texas, anywhere in a different state, if my credit union like Point West does have that, I can still be a member of Point West and use another credit union in Texas or California if I move. Great question.